Apple and Amazon are massive companies with hundreds of billions of dollars in revenue and tens of billions of dollars in profits. But which one is the better stock to buy today? That's the question I'm going to answer in this video, comparing these two giants on revenue growth, profit margin, cash flow, return on invested capital, the outlook for the next 5 years in earnings per share expectations, and finally, valuation to determine which one of these two is the better stock to buy today. There's a lot to cover, so let's get into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Starting with revenue growth, you'll notice that Amazon has exceeded Apple in revenue growth in almost every quarter over the last 10 years, and I suspect that will be the case going forward for the next 10 years. Amazon has several growth catalysts ahead, whereas Apple's growth catalysts are not as apparent. Now, Apple is making innovations in critical categories, and that could spur incremental revenue growth. However, longer term, Amazon is the one with the greater growth drivers. Amazon's core revenue generating business, e-commerce, is still in the early stages of growth. The vast majority of spending still happens in person, and that's going to shift online over the next several decades as well. Spending money online is just so much more convenient than shopping in person, and as people age, as demographics begin to adapt technology worldwide, Amazon's e-commerce business will become that much more attractive. Now, Apple has incremental areas where it's working. Its virtual reality headset, the introduction was okay. Its price target, its price over $3,000, it's not going to reach the mass public. However, if Apple can innovate on cost and bring that product down to the mainstream at below $1,000 for that product, that could drive some growth for Apple. Additionally, Apple's services segment is growing faster than the company overall, and that's good news for investors because Apple's services segment is much more profitable than its hardware segment. Still, the bread and butter for Apple is the iPhone, and the market for iPhones is pretty saturated. The market for smartphones, I should say, is pretty saturated. Growth from Apple's iPhone will have to come at the expense of market share. It will need to take market share in order to grow in that business because the overall industry is saturated. That's not like what I talked about with e-commerce, where the industry overall is still growing significantly and has a long runway for growth ahead. Now, when we compare these two on operating profit margin, you'll notice that Apple is more than 3 times as profitable with an operating profit margin of 31%, whereas Amazon's profit margin is only a fraction of that at 9%. However, Amazon's profit margin is growing, whereas Apple's profit margin is more likely to remain flat. You'll notice Amazon's profit margin was close to 0% in 2015, and that's increased to 9%. Amazon has recently accelerated growth in its AWS segment, which is more profitable than the business overall. It's also expanding its advertising business, which is also more profitable than the business overall. Those two categories and the growth of those two categories will continue to lift Amazon's profit margin higher, as well as economies in scale in its e-commerce business. As more people shop online, it will lower Amazon's cost to serve, because if a person in the same apartment building orders a product and another person in that same apartment building orders a product on the same day, Amazon can serve both of those customers with one driver and one visit. And so as more people spend money online and spend more and more money online and spend more frequently, that will increase the amount of deliveries Amazon does in the same apartment building, on the same street, in the same neighborhood, in the same city, all of which will drive down the cost per delivery for Amazon. Apple, meanwhile, its profit margin is flat because of two offsetting forces. The hardware segment, the profitability in that segment is declining as Apple faces more competition and it has to offer more incentives, especially in different parts of the world where the personal income levels are not as high as in the United States and in more developed countries. However, its services segment is significantly more profitable and it's growing faster than the business overall, and that will drive profit margin higher. So they have two offsetting forces in profit margins. Looking ahead, the analysts on Wall Street that are following Apple stock expect it will increase its earnings per share by 11% per year over the next 5 years. Meanwhile, those same analysts that are following Amazon stock expect it will grow its earnings per share by 30% per year over the next 5 years. So roughly triple the expected earnings per share growth for Amazon versus Apple over the next 5 years. Remember, nobody knows what's going to happen in the future, not even Wall Street analysts, but they're pretty good at making forecasts. But remember, they are still just forecasts. They're not certain to come to fruition. The next thing to consider is cash flow from operations to sales. And in this metric, Amazon is much closer than Apple, and Apple's trending downward, whereas Amazon is trending upward. 29% for Apple, 18% for Amazon, but I like that Amazon is trending higher while Apple is actually trending lower. Return on invested capital measures how good a company is as taking money, turning it into products and services, and generating profits. Apple has been historically excellent at this, and they remain so at 58%, and that's increased from 25% in 2015. Amazon also has done well, 17% most recently, up from flat in 2015. Amazon's investments in products and services has been excellent. They've had some flops, but for the most part, when they invest in a new product or service, it tends to generate significant return on investment for shareholders. And finally, the last thing I will compare these two on is valuation, and they're trading at roughly identical prices, which hasn't been the case for the better part of the last year. Typically, Amazon trades at a premium valuation to Apple because Amazon's growth prospects are much better than that of Apple. However, today, you're able to buy Amazon stock at roughly the same valuation you can buy Apple stock when measured by the forward price to earnings ratio. And since Amazon has better growth prospects both on the top and bottom line, if I had to pick between these two excellent stocks, I would pick Amazon stock today. Still, I like both of these stocks. I have Apple stock rated as a buy as well as Amazon stock rated as a buy, but I like Amazon more than I like Apple. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.